Friday, April 25th, market analysis, Stan Ehrlich. I start out with the stock market indexes, go to futures, and sometimes cycles, trading psychology, a variety of other topics. But here we go. Stock indexes have got a little bit of strength this morning, but interestingly enough, a very quiet, dull, slow day. Now, yes, we've gotten a little bit above yesterday's high, which is a challenge of a resistance area that's pretty important. So we've come up to about on the E-mini 55, 53-ish, and that is right in the ballpark of where we've seen some bottoms and lately some tops. I would not be surprised to see the market start to slip back down again from here very quickly. But that hasn't started yet. We're not overbought. I would have liked that more, but we're not. But we're in the resistance area right where, price-wise, you might expect it to turn down again. If it was overbought, I'd feel a lot more confident about that, but we're not. Let's take a look at a 15-minute chart, which I usually don't provide. Usually it's either a 1 minute or a 5 minute, but I wanted to give you a little bit longer term perspective in some significant detail. 15-minute chart. So here we are, a little rally a little while ago, a couple, 3 hours, and it's right in the ballpark of where the market has been having trouble on the way down and or on the way up. So now you're approaching it from below, that's resistance on the way up. If we're approaching it from above, it would be support on the way down. But nope, right now it's resistance. And lately, as you can see, let's go back to approximately toward the end of February, when this bear move started. This rally is really not super big so far. Now, we did get a fantastic bullish engulfing on April 9th, and in every one of them, actually, except for the SPY buy signal. So that puts things in my favor in terms of my strategy is concerned. Let's go look at the SPY real quick. This is, the daily data chart. Up against resistance. Same story as you would expect from the MES to the SPY. And the 15-minute chart is getting right up there against resistance also. Look at the QQQ. Not quite, but just slightly higher is going to be the same problem scenario, resistance area. The bullish engulfing on the QQQ was actually on Monday of last week, April 7th. So it was a couple of days earlier than the other indexes, which had it on Wednesday, the 9th. So I'm liking what I'm seeing, but I'm also seeing problems around where we are or a tiny bit higher. 15-minute chart. We've gotten into slightly this resistance area. So I'm looking for a turn down, frankly. And the NASDAQ NQ, same story. We are currently in a resistance area and have been able to get a little bit above the beginning of a previous support and resistance line as opposed to an area. But I think it's about to turn down. I don't have much confidence in this rally. I've been saying that off and on for a couple, 3 weeks. Next, NASDAQ 15-minute chart leading the way up, but not by much. So it's in this little resistance area. Let's see what happens. I think the indexes are about to turn down, but it hasn't started yet, so I'm not short yet, that kind of situation. But if I was long, I would be tightening up my protective sell stops under the market and looking to get short. And look at the YM. Today is a doji, an inside trading range, no higher than yesterday's high and no lower by any means than yesterday's low, and slightly lower on the day at the moment. So it bumped against the beginning of the resistance on Wednesday and then pulled back a little for the high. And the high today is even a tiny bit lower than yesterday. So as far as the highs are concerned, They are having trouble right here at this resistance area. If it can get through these previous highs and the overhead resistance area, then I will be starting to talk about a rally up to certain levels. Right now, I don't think it's particularly appropriate. Not going to waste your time. I just think the market is likely to turn back down again. And in that situation, if I'm right, I do look for the lows that happened just a few days ago, the beginning of this week, to get broken. And I look for the lowest lows that we saw at the beginning of April to also get tested, if not broken. That could be very bearish. Next, and we've got the 15-minute, 30-minute chart of the YM. I think I may have said 15 minutes at the beginning. These are all 30-minute charts, half-hour charts. Just to show you more detail, but for a longer number of several months. Now, the Russell is a doji, still a tiny bit lower on the day, basically unchanged. And like the others, starting to get locked into between a rock and a hard spot, slightly above the market, resistance. Slightly below the market, some support. But there's much, much more resistance above the market at this point than there is support below. Looking for the rally to stop and to turn back down. The Russell 30-minute chart. No new highs for the last day or two. Major resistance a little bit higher. Bonds and notes. Bonds are rallying. They managed to make a minor new high, higher than Wednesday's spike high, but it's in an area of resistance. Now, bonds have held a major bull trend line on that break and oversold conditions on April 9th. So I could see a little more strength here, but we've got to really overcome quite a bit of resistance at, 116.5, 17, all the way up to 18 and change. In fact, I'm going to have to say all the way up to almost 20. But if we can get a lot higher, which is 5 points or so, then the situation changes to a long-term bullish story. Very long-term and very bullish, including an upside objective of 146. Is that right? Yep, that's right. Notes. Not quite a new high for the last 5 or 10 days, but very close. Might be able to do it. We're still kind of stuck in this resistance area. Granted, at the moment, we're a little above it. And if we stay here or climb some more, then I've got to turn friendly. But at this juncture, it stopped several times at this price level where it stopped today so far. So new highs are going to be quite friendly. I'll probably look for a few more points higher. The big story for both bonds and the 10-year notes is this broad year-and-a-half double bottom. That's what's causing the potential for a very large bull move if it can have a major breakout. Now that means that we've got to get up to and close at let's call it 115. Yeah, that's good. Once we can do that, we'll probably be able to make new highs above 116. And then we're off and running in a long-term bull move that should get up to a minimum of 124.5. Crude. Doji today, a little higher. We're stuck between a rally high, top of resistance area, and the bottom of the resistance area. It would be support at the moment. And we can bounce around in this little zone maybe for a day or two more. I favor the upside modestly, only because of this bullish engulfing bottom that we caught to the exact day, April 9th. That's why I've developed the system. It does catch tops and bottoms to the exact day frequently. Not every one of my signals is the top or bottom for a big move, a giant move, or a decent, profitable move. It may not last more than several days, but as long as the size of the move is good, then the signal made money. This bearish one did okay. Not a lot of good ones at the moment in crude. Next chart is heating oil. Caught the bottom. April 9th, like crude. And it looks like we're about to make some minor new highs, but we're in a little resistance. So I can't get super bullish here. I can get a little more friendly. I can justify moves up to, I don't know, what, 2.3, let's call it. Let's see if it'll get that strong. I think it might. I don't see any reversal. Nowhere near overbought. No particular reason for it to turn down. Just having a little trouble in this resistance. So looking for a little more strength there. Next, natural gas has reached my downside objective on the head and shoulder top that it formed. It did it, past tense, the beginning of the week. Formation worked perfectly. A couple of minor glitches along the line, but overall, it did what it was supposed to do. Now it's oversold for this week, all week, and that's causing me to look for bullish engulfings, buy signals. That hasn't happened yet. Today, Doji, not doing anything particularly important. I'm watching for a bottom, a turn up, a signal. Gold has a brand new, today, first time in months, sell signal. It is an ER sell signal. It's red. It is an outside down day or bearish engulfing. It has been overbought in the last few days. It qualifies. This could be, should be, I think, the beginning of a move down to probably a little below 3,000. Maybe down to 28.16. But I'm looking for 3,000. A lot of move down here. Also, silver has an outside down day, bearish engulfing, but it's not an ER sell signal because it didn't get overbought. It came very close. But if it's not overbought and the bearish engulfing, I don't have a red signal like this one here, which worked very nicely for about a week and a fraction. Like this bottom, which worked fantastically. Now that signal didn't work. And when they don't work, I do not lose a lot of money. My stops are always relatively close. And they're always in. I never put on a trade without a protective stop. Cardinal rule. Always protect your rear end once you get into a trade. Absolutely important. Next chart. Platinum. We caught almost the bottom. Green bullish engulfing, buy signal. It's just gotten stuck here the last few days. A little lower today at the moment. Nothing significant. I think there's a good chance it could come up a little bit more. But it has reached a lot of resistance, and it is stumbling. So let's kind of wait for a breakout, but I think it's going to be the upside. And if I'm right, we'll probably work back up to the same areas that it's topped out before. 1030 up to maybe even 1070. Next, we got the bottom almost to the exact day on copper. Today we have an outside up day, bullish engulfing, which is normally bullish. But I don't like the fact that we're fairly high on the RSI scale, not quite overbought. And this bullish engulfing could slingshot us up for a day or two more fairly sharply and then get overbought somewhere up around 51, 52 or 5.1, 5.2. That's what I think is about to happen. Next, we got soybeans. Now, the grain complex, I've been talking about a long-term bottom and trying to justify it when I see the opportunity, and the price action is doing what I was hoping it would be doing. Now, I've got a little bit more evidence that I could be right. Meal and wheat are still giving me a little trouble, but we have a major bullish breakout today. Well, you'll see in a moment. Soybeans, new highs since late February. That's a 2-month new high. Pretty decent time frame. I want it to stay up, close higher. Otherwise, we'll have a minor little reversal and doesn't mean too much. But it's gaining ground on the average. This large head and shoulder bottom started in August of 24. Shoulder, head, and shoulder produces a neckline that is almost dead flat. The neckline is going to be around 1107. So we're getting closer and closer with new highs for the rally today. And if this pattern works, It has a minimum upside objective of about 1240. It's a little bit leaning to RP, so let's move it over there. Okay, that's good. So, getting closer, but soybean oil has tested exactly today. The rally high is smack dab at the neckline. And I said yesterday on my YouTube, go back and listen to it, that because the market is overbought or close to it at the time I recorded the YouTube, remember it's about this time each day in the middle of the day, we were either very close to or just barely getting to overbought, that if we touched the neckline, we would be more overbought, and it might have a pullback. I'm thinking 49.07 or something, and then shove through the neckline, major bullish breakout, long term, and have a huge bull move up to, at a minimum, supposedly 62.75. I'm going to call it 63. No point in splitting hairs at this moment because we're way, way, way far away from that at 49. So we're very, very close, actually on the edge of a breakout at the rally high today, and then it pulled back. We're now actually trading around unchanged to a little bit lower momentarily. Wow. So I think a little pullback, not much. It has to hold around 49 and then or higher and turn up and break out, close above, probably on a very strong, big volume, large rally up day, cross above the neckline. I think it's going to happen next week. I'm sorry, this is Friday. Meal is not cooperating, although it's gotten a little stronger here in the last hour or two, so good. We're up slightly on the day. We might have a minor upside reversal. I could justify sort of a little bit of a bottom formation. If we do start to rally in the next few days, I'll talk about that pattern in detail. Right now, I don't think it's important. I just know it's got to hang in here. It's got to start going up, or we're going to see another sharp leg down. We're going to see it come down quite a bit more if it can't hold. I would say down to probably 270. If it does reverse and it catches and it looks good and it's acting good, then I'll start to get a lot more bullish on soybean meal, but I can't justify it. Corn is doing very well. Did have a small double bottom, which by itself was the last shoulder on a very large head and shoulder bottom. We caught the exact low day on February 26th. Bullish engulfing ER buy signal. Very nice move up afterwards, to say the least. We also caught the last shoulder low exactly on October 17th of 24, which was the last shoulder on a smaller head and shoulder bottom, July, August, September, October, which did work. End of story. Bull move. Got too subjective to the upside at a minimum. I told you, January 23. I held your hand all the way through that pattern. Now, after getting up a little higher, it's created the pivot point for the neckline right here, February 19th, at about 547, slanting downward slightly, extremely normal for a head and shoulder bottom. Rallied about halfway toward the neckline, got overbought, pulled back a little bit. We could be ready for another drive into new highs and doing what soybean oil did today, test the neckline, maybe a week or two or three for corn. Wheat, sort of like soybean meal, no new low. It did not get oversold, too bad, and turning up very slightly. I'm not impressed so far today. So meal and wheat are the only two that really need to get their rear end in gear and start to rally a lot. Okay, Miss Piggy, I'm sorry, cattle first. We got the bottom, green. We got the bottom, green. We got a nice low, almost the exact low, green. Nice buy signal, rallied for a little bit. A little hard pressed to find them. That's out of line here. Got to pull that down. Good. So lately the signals have been very good. Bottom, top sort of, bottom, good sell signal, good sell signal, good buy signal. Nah, that didn't work. We've rallied into new high ground. It's having a little trouble here. So far, it is holding above the previous highs. That's normally very bullish, but it's stalling out slightly. If it has a correction, and I'm not sure, it shouldn't be down very much, and it shouldn't last very long. A few days, a week, maybe 2 at the most, and maybe down to 203-ish. Yeah, even a little bit lower. Not much. But I do expect to see new highs for the trend soon or relatively soon. Bullish on cattle, but looking for a minor retracement, maybe. I'm not sure. If I were long, I wouldn't be getting out. I'd just be raising my stops a little bit. Miss Piggy, we have some bad data for a few days, but I know that they're not affecting the chart much, but some. This is not a legitimate buy signal. The code thinks it is because of the price action the previous day being incorrect. So all I've got is really a rally up to resistance, and it's hanging in there right now. A little bit higher on a closing basis, and I'll be flat out friendly to Miss Piggy, but it hasn't done that yet. It looks like it's about to do it. So I'm saying higher. I think it's going to break out to the upside. That means I would expect a very small gap way up here to finally get closed. And the gap is right there to right about there. Good. So we're looking for 105 and a quarter. Next, we've got the 3 stocks I'm following at the moment. We bought the bottom with an ER buy signal on Shell, April 9th. Looks like a new high close as of today, if we can stay here, and maybe a new high on the rally also. The stock indexes are moving up a little bit more now, getting a little stronger, a little quicker. We're up about 3.5. I'll be showing you in a moment. Again, Apple left a small gap behind a couple of days ago. I'll even put a little zone in here also for you. And that's the high of the gap, and this is the bottom of the gap, sorry. And there we go. So coming back in down to fill that, and there's one a little lower than that also. So that's a little better. I'm not going to be surprised to see a dip back down to 193.80. We're coming up against a little resistance. Not really important. So here we got something pulling the market up and pulling the market down. That's a little complicated. Momentarily, we got momentum. We're not overbought. So I'm going for the upside first. Up to 216.50 is what I'm expecting at the moment. And Tesla. Very strong rally today. Almost a new high. Almost a new high close. Almost, not quite, since early March. Almost 2 months. Double bottom formation. And the reason I've got Tesla as one of my new charts that I've been following for about a week now is because I heard the national news state that, wow, Tesla has lost 70% of value in the last few months. Now, I've been at this over half a century, way before media got their nose stuck in market analysis, so to speak. They are almost always wrong at the right time, so to speak. When you hear very bullish news on the evening news, national news, think opposite. Yeah, I know Tesla lost 70%. Hell, that was way back in March 11th that it did that. They don't tell you that. It's been going sideways ever since. They don't want to mention that either. It's old news. Markets move on anticipation and reverse on the realization. So it's happened. I'm bullish on Tesla. Not quite sure how much. I think at a minimum upside expectation would be 326 for the moment. I'm not going to be surprised if we don't get up to 376. We did get a sell signal on the exact high day, December 18th. These are not after the fact. All of these red and greens are the day they happen, and I talk about them the day they happen. And if they happen after my YouTube, then I mention them the next day. Top of the market, red. Top of the market at the time, red. You guys have a great weekend. and profitable trading to you.